Hello and welcome to Insights with Thomas Caldwell on March 17th, St. Patrick's Day, 2022. Tom, inflation is on top of everyone's minds right now, but what are your comments on inflation?
Inflation is the combination of a lot of overlaying factors. For example, we had COVID, that pulled people out of the workplace. Money was spent to help people get through a period of time with no income. Governments have been spending lots and lots of money beyond a necessity. Interest rates have been very, very low. As a result, we had labor shortages, we had supply chain shortage. And then, of course, you had all of the Western world's politicians galloping after the millennials in this climate change business, cutting supplies or money going into the oil and gas industry. We're paying the price for that now. And President Biden stopping the Keystone Pipeline. Now we have a war. Wars are always inflationary because they're terribly wasteful in obviously human lives, but everything else. So you're having commodity prices go up significantly. So now you have all of these things going on, plus a good construction boom using copper and strategic metals as well. I think it's going to be a little while to unwind this. And it's not going to be brought down by higher interest rates particularly. It almost has to work a cycle. For example, the feeling is that the February numbers could be as high as 10% inflation. Even if they get to 5%, that's above their target of 2%. But inflation is going to be a fact of life for a little while yet, even after this catastrophe in the Ukraine ends. There's going to be a ripple effect for quite a period of time. So we're just going to have to get used to it. Calibrate your spending, buy what you need, not what you want, that type of thing.
And so let's add market volatility to this now as well. Can you tell us about market uncertainty?
Well, the market's always uncertain. I remember once somebody said to me, well, call me when everything's more to calm down and everything's normal. I said, we won't be talking again. There's always something going on in markets, and the volatility is significant. But let me say a couple of covering comments. And we've seen clients go in, out of the market, et cetera. But the thing to keep in mind, I said this at the beginning of the year, that I believe the market at the end of this year will be higher than it was at the beginning of the year, despite all this nonsense we're going through. Now, we did have big sell-offs in the high-tech companies in the United States, the big ones, the Amazons, the FANG stocks. But underneath it all, it's quite interesting to watch. The markets want to go up. It sounds like a bizarre thing to say, but you look at, for example, just even to yesterday's markets. Market's up 300 points. It's up several hundred points the day before, only on the hint that the Russians are being a bit more reasonable in the negotiations. Now, mind you, Russian and reasonable are oxymorons. They don't go to, it's like Ottawa nightlife. It doesn't exist. But just the hint of some breakthrough in that conflict, wham, up goes the market. The market's looking for reasons to go up. That seems to be what's going on right now. I still, as you know, I'm an optimist. I still think we're going to come through this period. Inflation will abate at some point in time, but it won't be quick. But I think investing in assets, owning assets, is the only preservation of purchasing power. And that's whether it be equities or we've seen it in houses and the housing prices still going up. Owning stuff.
Thank you so much, Tom.
Thank you.
And thank you all for watching. Bye for now.